What is up, everyone, and welcome back to another episode of Tin Invest. The time is now investing, where I'm your host, Jimmy Bishrat. In today's episode, we're not going to be breaking down a stock or a public company like that, but instead, we're going to be talking about how Peter Thiel was able to turn a $2,000 investment into a tax-free $5 billion, with a B, $5 billion that he will have full access to in less than 6 years. So first off, who is Peter Thiel? Well, Thiel is most known for being one of the co-founders of PayPal. But what others don't know about Peter Thiel is he's also one of the managing directors of the venture capital firm Founders Fund. Among some of the fund's investments are SpaceX, Airbnb, and Affirm. Peter Thiel was also one of the co-founders of the CIA-backed big data startup Palantir, which went public back in 2020. Now, I know I just named a few interesting companies, and if any of those stand out to you and you want to see a video on them, please let me know in the comments below, and I'll definitely do my best to get a breakdown of Airbnb, Palantir, or whatever one of the stocks you want. Actually, better idea, I can even do a video on, let's say, Peter Thiel investments. So if that gets you excited, or if you guys want to see that, let me know in the comments below. So anyways, let's get to the important stuff. How the heck is Peter Thiel about to get a tax-free $5 billion? Where'd he move this money? The Cayman Islands? What's going on? What little billionaire trick did he use? Well, the answer is none of that stuff. He literally just invested into a Roth IRA, something that me, you, and pretty much anyone can do. Okay, so what's a Roth IRA? Well, in my opinion, it's my favorite of all the retirement accounts. Roth IRAs are an after-tax account, which means the money you put in is taxed upfront, which then results on your earnings in the investment being tax-free. There's a few catches in this though. One of them being you can only invest a max of $6,000 a year, and you're not allowed to withdraw the funds until you're 59 and a half years old. Now, there are a few more rules about income levels and whatnot, but I'm not going to get into all that. Really, the main thing you need to know is the money is taxed up front. You can put a max of $6,000 a year, and you can't cash it out until you're over 59 and a half years old. So how does Peter Thiel's Roth IRA compare to other people that are his age? Well, the average Roth IRA for Thiel's age is around $100,000. Peter Thiel's is $5 billion. So how in the heck did he make so much more than everyone else? Well, according to ProPublica, Thiel, PayPal's co-founder, used his Roth IRA to buy 1.7 million shares of PayPal back in 1999. He bought the shares at 0.001 cents, 3 years before the company even went public. And as the company grew in value, well, so did Thiel's tax-advantaged account. Now, Forbes reported things a little bit differently. They reported back in 2012 that in 2001, Peter Thiel acquired PayPal shares for his Roth IRA at 30 cents a share. And he'd apparently enjoyed a tax-free gain of $31.5 million back when eBay bought PayPal for $19 a share in 2002. Forbes also reported that he had appeared to have put early Facebook stock into his Roth IRA. So Thiel has used this trick for maybe more than one company. So yes, Peter Thiel did have early access to these PayPal shares, and yeah, that may be considered unfair, but he was also the one that was smart enough to buy the shares in the Roth IRA account. And I mean, he also did take a calculated risk here. I mean, remember, you're only allowed to put a max contribution per year. For instance, back when Thiel did it in 1999, the max you were able to invest was $2,000. So he essentially risked that year's contribution in PayPal. So he took a calculated risk and it paid off. So is it unfair? I guess I'll leave that for you to decide. I mean, just imagine if PayPal would have flopped. Imagine if the company didn't become what it is today. Then Peter Thiel will be sitting on an account that's pretty much worthless, and I probably won't be making this video today. But PayPal didn't flop, and Thiel is sitting on a tax-free $5 billion. So now the question is, should the rules change? Some people talk about adding taxes once your account reaches a certain amount. But in the way I see it, that's just taking away from one of the many benefits of a Roth IRA. Another way to prevent something as dramatic as this to happen again is by preventing, or let's say putting restrictions on the stocks that you're able to purchase. So for instance, in this case, a rule that forces investors to only invest in publicly traded companies and essentially shares that everybody has access to. At the end of the day, Peter Thiel was just really slick and it paid off for him. So, should there be change? Do you believe that Peter Thiel should pay taxes on this account? Let me know your thoughts in the comments below. And if you want to see more content like this, or if you want to see a breakdown on a company that you're investing in, please let me know in the comments below. Again, I really appreciate your guys' support. Thank you all so much for watching. And always remember, the time is now.